On the 10th of November 2021, a 6-year-old record was broken when a company's initial public offering, which is the process of turning a portion of your company into tiny shares which can be traded in the public markets, raised almost $12 billion. More shocking, however, was the fact that these shares, which amount to around 17% of the company, gave the firm a total valuation of $66.5 billion, and just 6 days later, the company reached an all-time high valuation of $153 billion. The company in question, Rivian Automotive, an electric vehicle manufacturer who at the time of their $153 billion valuation had only delivered 12 vehicles. To put this into perspective, Ford, the century-old automaker which in 2020 delivered 4.2 million vehicles, was at the time valued at $77.5 billion, essentially half of Rivian. This of course is completely stupid, and I have no doubt that the majority of you watching right now will be incredibly confused as to how this record-breaking situation ever came about. Well, in this episode of Money Explained, we will be exploring this deeper, to find out the reasons behind Rivian's massive valuation and maybe why this entire thing could potentially be a warning of things to come for the stock market in general, which investors should genuinely be worried about. All of this in the first ever episode of Money Explained, so please consider subscribing if you find this video interesting, and if you want to see more stuff like this into the future, so let's go. So who even are Rivian, and what history do they have? Well, Rivian was a company founded all the way back in 2009 by an MIT graduate, Robert Scaringe, who originally planned to produce his very own electric sports car, however soon dropped the idea after deciding to join in on the SUV and truck markets, as the popularity of SUVs have drastically increased over the past decade, and the idea of an electric pickup truck was very unique at the time. They unveiled their truck and SUV models, the R1T and the R1S, at the Los Angeles Auto Show in 2018, which have gone on to be highly praised by reviewers, and finally delivered their first vehicle in September of 2021. A month later, after having delivered around 12 vehicles, they had their IPO, which as stated earlier raised $12 billion for the company, but this wasn't nearly the first time the company had raised large amounts of money. Since 2019, $10.5 billion had been raised from private investors, most notably Amazon, who now owns 18.5% of the company, and Ford, who owns 11.8%. And this is one of the biggest reasons people have for justifying Rivian's valuation, as surely if industry giant Ford and one of the largest companies in the world, Amazon, are invested into Rivian, then there sure must be some promise for long-term success, right? Amazon are not just passively invested in Rivian, however, they are selling the idea that they are closely working together. You see, Rivian doesn't just have the two models, they have also, in direct collaboration with Amazon, developed an electric delivery van, creatively named the Electric Delivery Van, EDV, of which Amazon have ordered 100,000 of, making it, if it goes through of course, the largest ever order of electric vehicles. However, that is of course the big question. Was this order just an announcement made to drive up excitement and confidence for the firm, or is this a genuine deal which will massively benefit both parties? Big deals or no big deals aside, however, Rivian does hold some very decent credibility over other new EV startups in the sense that they actually do have the ability to execute on their vision by actually producing vehicles. They purchased a 2.5 million square foot production facility in Illinois, which had been previously been owned by Mitsubishi, for $16 million, which will act as its main USA plant. People have compared this to Tesla's acquisition of an ex-Toyota and General Motors plant in California, who since purchasing it in 2017 have extended the plant by an additional 1 million square feet. This new production facility, as of early 2022, is now producing around 200 vehicles a week, which is still a long shot away from their eventual target of just under 4,000 vehicles a week. However, the fact that Rivian are finally actually producing and delivering physical vehicles on a multiple digit scale definitely adds to their credibility to some degree. Rivian has big plans though, and has no intent in stopping with just the one facility. They recently announced a second USA facility to be built in Georgia, which will apparently be able to produce around 400,000 vehicles annually. So all in all, it's safe to say that not only have Rivian spent their money to develop a handful of genuinely good products, they are also very much proactive in ensuring that they can actually build them. Now, this is the part of the video where we bring all of our positivity back down to earth and speak about why Rivian's valuation is absolutely fucking absurd. And let's start this by asking ourselves, well, how has Rivian's stock price done since it IPO'd in November last year? Well, not great. An almost 75% fall in the last 10 months is nothing to get happy over if you're an investor. Let's not get ahead of ourselves though. This current price of around 26 USD a share still values the company at a comfortable $23 billion. Remember, by the way, that Ford, the century-old vehicle titan which produces millions of vehicles a year, is valued just double at $45 billion. Like, I'm sorry, but how are these two even in the same league? Now, let's compare Rivian to every 12-year-old TikTok user's favourite company, Tesla, which in my opinion is also very overvalued. Now, remember how at the time of Rivian's $153 billion valuation, they had delivered a grand total of 12 vehicles? Well, by the time Tesla's valuation had hit the $150 billion mark, they had been actually producing and selling vehicles for 8 years, having delivered 1.2 million cars during that time. So apparently now 12 Rivian vehicles is worth the same as 1.2 million Teslas. That means for every single car Rivian produced to get to their valuation, Tesla had to produce 100,000 of theirs. Nice. So this begs the question, what is the real reason for Rivian's high valuation? Well, I'm actually going to start by saying that Rivian is very much a credible company. They have already sunk their billions into research and development into a few genuinely good products, which have been praised by basically every YouTuber and publication that has touched one, and so I would say that there is no doubt that if Rivian can pull through with their mass production, which they have also made incredible progress in, that they will see some very good success in the coming years. However, not success that warrants a current $25 billion price tag. You need to just keep comparing Rivian and its valuation to the likes of Ford, General Motors and Toyota to give you some perspective, because these firms are just simply in another league. But the reason Rivian is valued at so much is the same reason why Tesla is valued the same as the 9 largest car makers in the world combined. Hype. You see, the car makers that I just listed are just that, vehicle makers, but Tesla and Rivian, well, they are electric vehicle makers, and yes, there is a difference. You see, 2020 saw trillions of dollars in stimulus and government spending injected into the economy. This, coupled with the popularity explosion of personal finance content on YouTube due to people having more time to spend learning and just consuming media, caused the stock market to boom. And what better stock to put your free government money into than electric vehicle maker Tesla? I mean, it's no doubt that electric vehicles are the future of personal transport, and Tesla has been at the forefront of this shift on the hardware and software side for years now. Plus, its CEO is Elon Musk. He posts epic down with the kids memes on Twitter. In all seriousness though, Tesla has seen some insane growth in value over the past couple of years, and this has made investors everywhere incredibly excited, especially the ones that missed out on Tesla in the early days. So now in 2022, the letters EV are like gold, so surely anything EV related is gonna make you as an investor rich, because look, Tesla did it. Sound familiar? So yeah, massive speculation coupled with a massive money supply has to be put somewhere, and Rivian is just one of the consequences of this. It's no mystery as to why Rivian, along with hundreds of other firms, chose to IPO during that same period of time, because the current market conditions, high speculation, non-existent interest rates, loads of new retail investors, were perfectly optimal for raising high amounts of capital, and this is also very comparable to the dot-com bubble of the early 2000s. So, are things like Rivian's ludicrous valuation a sign of trouble, perhaps even a full-blown market crash and recession? It certainly seems that way currently, or are they just the markets showing signs of the inevitable new era of EVs, and that these early players such as Tesla and Rivian are simply just cementing themselves as market leaders for the coming decades? Well, what do you guys think? Personally, I lie more on the side of an upcoming market correction, as I still very much believe that both Rivian and Tesla are incredibly overvalued even after the recent market declines. But maybe that's just me being boring. If you have your own opinion, I'd love to hear it down in the comments, along with any other points for or against Rivian that I haven't managed to fit into this video. Anyways, this was Money Explained, and I hope you enjoyed my first ever video. Have a good one.